This is the luxury world. Get inspired with us today and tomorrow. The luxury watch world was sent into a frenzy this week as the newly released yellow gold Rolex Daytona, outfitted with a turquoise dial reminiscent of the iconic Tiffany blue, surfaced on the secondary market priced at an eye-watering 4.5 times its retail value. This is not merely a premium, it is a market shock, a symbolic mic drop that captures the bizarre, sometimes absurd nature of modern luxury watch trading. From the latest market data to the growing tension between supply, demand, and the brand's certified pre-owned strategy, today's deep dive explores why Rolex is not just weathering the shift, it is dictating the terms. Let us break it down, right here in this video brought to you by the Luxury World. For those who have not yet subscribed to our channel, doing so will ensure access to upcoming insights and content that can further refine their watch investment strategies. While this headline commanded attention, the broader watch market told a quieter, more restrained story. The resilience is overwhelmingly buoyed by just three names: Rolex, Patek Philippe, and Audemars Piguet. Most other brands are merely background players in an increasingly hierarchical market. Surface calm conceals deeper shifts. Rolex, in particular, continues to command the rhythm of the market without making dramatic moves. Some models remain in high demand, while others linger in displays, still valuable but increasingly overlooked, much like fashion items that have fallen out of seasonal favor. The mood is paradoxical, composed on the outside, but tense underneath. Rolex manages to shape the landscape effortlessly, its influence undiminished. Among the 35 major brands tracked this past quarter, only 2 achieved positive performance. Rolex edged up by 0.4%, a modest figure, but in a climate where most brands are contracting, even incremental growth is significant. Omega held steady with no growth, while Swatch suffered a 9% loss, a sharp contrast to the days when collectors lined up in droves for moon swatches like it was a doorbuster event. Combined, Rolex and Tudor posted a joint gain of 0.3%, though the partnership masks deeper contrasts. Tudor alone fell 2%, still outperforming its previous year, but trailing its parent brand. Rolex's durability stems from consistent gains across key collections. The Datejust rose by 0.8%, the Day-Date by 1%, and the GMT Master 2, Yacht Master, and Oyster Perpetual lines all recorded steady climbs. Strategic catalog changes played a critical role in shoring up Rolex's metrics. Before the Watches and Wonders display, Rolex discontinued 15 references from the Oyster Perpetual lineup, including the heavily hyped Celebration dials. The move triggered widespread dismay online, but the result was a calculated improvement in average value. While the average may have dipped due to discontinued models, the remaining 128 references in the catalog gained value. Rolex refined the lineup and kept the momentum alive. Zooming out, it becomes clear that the market as a whole is softening. There are too many listings, not enough urgency, and a shift in tone. Sellers who once held firm are now open to negotiations. Where listings in 2022 disappeared in minutes, now they linger with offers to circle back next week. The fever pitch of 2 years ago has faded. During the height of the boom, Rolex models like the John Mayer Daytona were selling for the price of luxury vehicles. The heat was relentless. Today, Rolex continues to move forward, more cautiously, but still in control, while other brands grapple with markdowns. Despite the market softening, Rolex prices climbed 0.4% this quarter, with an average secondary market premium of 15% over retail. This is not mere hype, it is systemic. Dealers refer to this phenomenon as liquidity. Authorized retailers see it as their lifeline. Value retention has become Rolex's unofficial currency, and few brands can replicate its consistency. Consider the basic math of Rolex resale. A Submariner with a retail price of $9,600 that fetches $11,500 on the secondary market yields a return of over 20% before it is even aged. That is the power of the Rolex name. Patek Philippe follows closely with a 12% premium. Omega trails far behind, grateful just to maintain visibility. While the headline suggests Rolex resale values dipped slightly by 0.2%, the more accurate like-for-like metric shows the opposite, a 0.2% increase. In simple terms, the catalog has shifted, but the demand for core models has not diminished. Certain references have emerged as the brand's heavy hitters this year. The GMT Master 2 led the pack with a 39.6% increase. Versions like the Batman and the Sprite continue to command strong premiums, reinforcing their status as icons of contemporary Rolex design. Not far behind, the Daytona surged 38%, proving that demand for the legendary chronograph remains undeterred by material variations. Whether it is steel, ceramic, or theoretically even plastic, the Daytona sells. An unexpected performer was the Oyster Perpetual, which rose by 30.6%. It has managed to outperform both the Submariner, which rose 14.1%, and the Datejust, which went up 11.7%. The Op's success defies its entry-level status, demonstrating that Rolex's simpler offerings are being increasingly recognized for their collectability. At the other end of the spectrum, not every model enjoyed the same momentum. The Day-Date slipped by 2.3%, while the Deep Sea dropped 5%. Their size, weight, and stylistic boldness may be contributing to reduced appeal. The division is clear. Steel sports watches continue to dominate demand, while precious metal and oversized pieces struggle to find traction. Adding another dimension to the Rolex ecosystem is the Certified Pre-Owned CPO program, launched in late 2022. The initiative introduced factory-certified, pre-owned watches that are at least 3 years old, sold with official Rolex packaging and a 2-year warranty. On paper, the move promised transparency and quality assurance. In practice, it added a 30% markup and created a new tier of luxury resale. With over 200 retailers participating, the program appeared strong at first. But recent developments suggest contraction. Some partners are quietly exiting, and replacements are not lining up. The CPO inventory also tells its own story. Models like the Datejust and Daytona dominate the listings, while hotter references, such as the GMT Master 2 and Oyster Perpetual, remain scarce. This imbalance may indicate either strategic hoarding or consumer reluctance to pay a premium for more liquid models. Overall, Rolex listings have declined for 2 straight quarters. Lower supply is only a positive if demand continues to match. Despite this, Rolex remains the fastest-moving brand in the case. The share of models sold within 30 days increased by 1.8%, reflecting continued appetite for the right pieces. However, not every watch flies off the shelf. Some sit for extended periods. Dealers are holding firm on pricing, resulting in a market where slow-moving inventory is quietly accumulating. These pieces occupy a kind of luxury limbo, too prestigious to discount, yet not compelling enough to move quickly. The market is not overheating, but it is tightening. Rolex continues to exert control not by force, but by subtlety. It sets the tempo while others react. As 2025 progresses, the luxury watch market may tilt in either direction. But what is increasingly clear is that Rolex remains in the driver's seat. Meanwhile, Rolex continues to adjust its catalog with the finesse of a luxury strategist. Celebration dials exit. The land dweller enters. Inventory levels are kept lean. Demand remains strong. The formula is precise. Just enough product to generate desire, never enough to satisfy it fully. The result is a market where flipping is harder, margins are thinner, and long-term ownership becomes more attractive. Rolex is not simply riding market waves, it is charting the course. So, where does this leave collectors, dealers, and the brand itself as we move further into 2025? The landscape is cooling, but it is not collapsing. Rolex has managed to create a stable foundation in an otherwise volatile environment, preserving demand, maintaining prestige, and redefining the rules of luxury watch economics. If the broader market is playing checkers, Rolex appears to be playing chess. Whether the certified pre-owned program is seen as a smart brand extension or an overpriced green sticker, it underscores one thing: Rolex is always 3 moves ahead. What are your thoughts on the Rolex topic we shared in this video? We would appreciate it if you let us know by leaving a comment and giving it a thumbs up. Do not forget to follow our channel for more content. Once again, this is the luxury world, and we look forward to having you join us in our upcoming videos.